So today, Tesla is announcing first quarter earnings. So I thought I would give it a price target prior to those earnings coming out. I don't think that matters in terms of my valuation because it's a long-term projection. I have harped on Tesla before. You can see those videos here saying that it is way overvalued without actually giving it a target price, which I will remedy today. Now, the basic idea here is that I will assume that the market has it right with the established competition. I did that with Zoom. You can check out those videos here. There's a ton of information in this video, so please feel free to pause it if necessary. All right, so if we go and look at Zoom versus GM, that's the established competition I'm going to use. We can see that Tesla is trading at a market cap of 710 billion versus 85 billion for GM. Okay, so that tells us the market is saying that Tesla is worth 8.4 times what General Motors is worth. Okay, so our question is, how can we justify that? So let's look at vehicle sales. Let's see if that justifies that differential. We can look at Tesla. Last year, they sold 500 million vehicles. Giving them a 71 basis points of the global market share. General Motors sold 8 billion vehicles, giving them a global market share of 11.43%. And let me just say, because of the pandemic, I'm looking at both companies over the last 2 years and just taking the best numbers, kind of giving both of them the benefit of the doubt. If some of these numbers don't make sense to you, that's what's going on there. That tells me that based on vehicle sales, Tesla is worth, just a tiny, tiny amount of what GM is worth. So I'm going to say, nope, that is definitely not what is happening here. So let me also take a different stab at it and say, based on the price and the vehicle sales, we can see that Tesla is trading at $1.4 million per car sold, and GM is trading at $10,575 per car sold. So let me ask you, which company does the market have it correct? Like, what makes sense? How much does the vehicle sell for? What could possibly be the earnings after the cost of what's sold there? This is absolutely crazy. Clearly the market is much more correct when it comes to GM. Okay, this is absolutely insane if you ask me. It's not vehicle sales, maybe it is revenues. Okay, so if we look at revenues, we can see that Tesla 31.5 billion, see GM 137.2 billion. That gives us a Tesla value of 0.23 times GM. So this is not it either. Okay. Well, maybe it's earnings. Let's take a look at earnings. Okay. So Tesla 690 million in earnings. GM, 6.7 billion in earnings. That tells us that Tesla's worth, 0.1% of GM. So clearly it's not earnings either. Okay. But wait, there's something else. So Tesla actually has a bunch of carbon credits that will not be sustainable going, far into the future. That is actually giving them a giant tailwind. So let's take a look at those. Okay. Here, feel free to pause it if you need to, but they have a huge carbon credit, especially in 2020. If you remove that carbon credit, 2018, 2019, 2020, all of them have negative earnings. Okay. So let's go back again, look at this. So Tesla, we're gonna say, best case scenario, best over the last 3 years, negative $290 million of earnings versus GM. Okay, so that gives us that basically Tesla is, you should have to pay someone to take the shares off your hands. Okay, so clearly it's not this. Okay, that is not sustainable. Let's go ahead now and look at, based on GM, we'll say if the market has GM, right, what should we be pricing Tesla? So that's the left column there. So based on vehicles sold or market share, we should be pricing Tesla at $5.51. Based on revenues, $20.25. Based on earnings, etc. You can look at the chart there, and then kind of necessary to justify. You can look through those numbers, but the one that just jumps out at me is like basically to justify the market price for Tesla, they would need to get a market share of 96%, which is absolutely insane. It's never, ever going to happen. Okay. This is crazy. You've got to be kidding me. Anybody that wants to buy this stock at that price is insane. Okay. Now, but wait, there's one more thing. So we got ARK Investments. Okay. We got Cathie Wood over there. They're saying, hey, we think their expected value for this stock is $3,000, right? It's only trading at, $740 right now. They're saying 3,000. So we're going to focus on that number and look at what would justify that particular price. If we do that, we're going over here and look again, stop it if you need to, but the big number is essentially to justify that price, they would need to have almost 400% of the current market share on the planet. What are we going to do? We're going to colonize other planets, or all of a sudden aliens are going to, I don't even know where these numbers would come from, but that is impossible. It's not going to happen. I'm sorry to tell you. Okay. Crazy. All right. Finally, you're saying, well, Brian, you're ignoring the growth. Okay, let's look at growth. So let's go back to ARK and look at what they say in terms of cars sold. Let's focus on their bull case. Okay. And incidentally, if they reach that, they're saying it's going to be worth $4,000 per share. Okay. That would mean that Tesla is going to grow. So lots of growth here from, their cars sold of $500 million to $10 billion. That's 2,000% growth rate, meaning it's going to be worth 1.25 times GM, which translates into a share price of $110.17. Okay. So if all the stars align, that's the target price based off ARK. I'm going to cut that in half. I really honestly think they're not even going to get there, but let's be super generous. I'm going to give it a target price of $55.08 versus, of course, the current price of nearly $740. Okay. Then you're saying, well, hey, Brian, you're ignoring Elon Musk. That clearly justifies the difference between that $55 target price and, the 740. But I'm going to say, look, Tesla, it's just a car company, and car companies as a business, they're really not that good. Cost of goods sold are very high. It's hard to grow. There's only so many cars that we can handle. Okay. As a population, I'm going to say that if you're focusing on Elon being the factor that justifies that astronomical share price, it's just a cognitive error. Okay. That's what we're talking about here. He really isn't adding value to the company to that extent. Now, incidentally, I have tons of videos on cognitive errors. Check those out right here. Anyway, I hope you liked that. If you needed to pause it, I hope you did go back and look at that again. There's some interesting numbers there. Thank you so much. I'm Brian Kozlowski.